All right, everybody, thanks for joining. We're going to go ahead and get this kicked off. Thank you for joining today's cybersecurity insurance topic around the evolution and current state of cybersecurity insurance. First of all, before I introduce everybody on the panel, I want to just say thank you very much for joining here today as a way of thanks to you. If you registered for this, obviously you did. If you're here, you should have a gift card from Thanks in your email inbox. If you don't have that, if you did not get that, please let us know. Let Lauren Lynch know, our director of marketing. You should have her email when you registered for this, and let us know that you didn't get that, and we'll get that out to you. But if you got that, again, you should be good, and you can use that for your lunch. So today we're going to be talking about cybersecurity insurance. We're going to be taking questions during this, but everybody's muted. So you should have a Q&A panel or Q&A button in the webinar on Zoom. Please use the Q&A and not the chat. We're going to be monitoring Q&A. If we see something come through in chat, we'll monitor that as well. But generally, all the questions need to come from Q&A. So please do that. If you've got a problem or something, let us know in the chat. We can monitor that as well. We are recording this. We will be getting that recording out later to everybody who registered. We will also be putting this on YouTube. So that'll probably be where your recording is. So you'll be able to share that out with anybody else you think is interested. Please do that when you get done with this. If you enjoyed this, if you got something out of it, we would really appreciate that. And then finally, at the end of this, when this is over, you will be getting a survey emailed to you. Please answer that survey. We will be drawing for one person to win a $100 gift card, I believe, from Amazon. So if you answer that survey, you'll be in that drawing. So please do that. We would appreciate it. And now we will kick this off. So again, here talking about cybersecurity insurance, the evolution and current state. The panelists we've got here today, myself, CTO at Set Solutions, also joined by David Adamczyk, a VP of Sales Strategy and Development at CyberArk. How you doing, David?
Good, thank you. Appreciate that.
Absolutely. Thanks for being on. And then Nolan Buchik is an agent over at Dean & Draper, also our Set Solutions cybersecurity, or well, just insurance agent in general. How you doing, Nolan?
Doing great, Michael. Thanks for having me.
Absolutely. Thanks for joining us. You may have watched our podcast with these two gentlemen on it. We're going to have some similar topics to that. I think we'll dig in a little bit more, but really wanted to get both of these guys on because they are experts in their field. So let's get this kicked off. So Nolan, let's talk about the evolution of cybersecurity insurance, kind of a little bit of history, where it was, 10 years ago or so, maybe a little bit less, and where it sits today. How do you see that evolution? Where was it, and how is it today?
Yeah, it's it's changed quite a bit. I would say probably more than any line of coverage right now in insurance, it has changed the most in the past 5 to 10 years, especially in 5 years. Before it was almost like a throw-in coverage, depending on, your industry and size and the type of information that you're obtaining from customers and vendors, et cetera. Really more like a throw-in coverage, what we call an ancillary coverage. So it's really not your typical primary policies or really what the insurance companies were seeing as your main risk, and the cost was much less then. You would get pretty substantial limit for very little. It'd almost be a part of your package policy and not really its own policy. And the coverage was a lot more general. If it was cyber related, we would essentially, pick up and pay. And it was very little underwriting. The questions sometimes were only 5 questions and didn't get very in depth. Sometimes if you weren't getting or purchasing a whole lot of cyber coverage, you might not get asked anything on it. Again, it would be kind of a throw-in. Take from then until today, it's the exact opposite of that. So, you now typically see them on a standalone policy, and as a standalone policy, you're going to get a lot more underwriting. So, in the insurance world, we call it a hard market, and a hard market is prices go up, underwriting gets a whole lot more stringent. The capacity from insurance companies to provide coverage is much lower, and a lot less players. A soft market, as opposed to that, a lot of people are playing. a lot less underwriting, pricing is low. Well, we went from, I guess, what you would call a soft market, because it was more so the unknown, to being able to retrieve the data from the last 5 years, and has become a hard market. And as we'll touch on here later, you know, we had a recent, you know, insurance meeting, and they were going through current in 22, what policies have seen the largest increase in pricing and what's the largest increase expected this year. And cyber insurance is at the very top of that list. That's over auto. We all know how that is, and a lot of other coverages. So present day, we're in what you would call a hard market. Now, keep in mind, doesn't mean they're not writing the insurance. They do want to write it, but they want to write the good accounts, the submissions that come in with answering yes to the right questions and no to the right questions. And so a lot of times you're seeing the cyber on a standalone policy. The cost, you know, there's a prediction right now for 2022, which we're obviously in. You could be seeing an increase on your renewals from 15 to 50%. And where you end up in that 15 to 50% depends on how we're answering these questions. So the coverage limits are more substantial, but then you have to be careful about the limits for what. You might have $1 million policy, but there could be sub limits depending on the type of risk and the type of coverage. So, and the underwriting is much more stringent. So, you know, where you're asking or answering 5 questions, you might have 5 pages of questions. And they, if you do not answer the way they want to answer, you're seeing a lot of declinations, which, again, years ago, a soft market, they really didn't decline you. They might rate you a little more than someone else, but you were going to get coverage. Here we are in a hard market. The insurance companies will decline you. I mean, it's true. They will actually not write a policy, believe it or not. So it's really important more than ever in the cyber insurance world to have the checks and balances, the protocols and things in place, the protection in place to get the underwriters to relax a little bit. Be honest through your underwriting process, but you can expect a lot more questions in the past. They still want to write it. They have nice, good, broad coverage forms. It is available, but they do want you to fit into a certain box. The box used to be a lot bigger. It's a smaller box now. It's possible to get there. People are doing it, but it's just a little bit more difficult to obtain the coverage. And depending on the answers of those questions as well, might depend on the type of coverages that they're going to offer. And you got to check the exclusion. Some things might be excluded because you're not taking care of a particular part of that risk the way that they want to see. So it has been probably the most dramatic change in policy and underwriting of any other policy that we're seeing right now. So it's very much different than it used to be.
Great rundown. That makes a lot of sense. I think, you know, we've talked on the side before how several years ago I was asked by an insurance provider to come in as a cybersecurity person and go through what a typical cybersecurity program would look like with them, for them. What are all the pieces? And that was probably 6 to 7 years ago. It obviously they had no clue in that room anything about cybersecurity. It's just not what they did. And they weren't in the cybersecurity space. And obviously those insurance have become much more knowledgeable about what needs to be in place. So thanks for the rundown, Nolan. That's perfect. So let's move over to David. So David, one of the things that's interesting is that and I think this is kind of a CyberArk view of it, and I think my view as well, is that the attacks themselves still follow a lot of the same paths, even though infrastructures and things have changed. So from your view, how CyberArk views it, and just in general, how do you see cybersecurity insurance being affected by what's going on today, what the attacks that are happening today?
Sure. Thank you, Michael, and good question. And being with CyberArk for 16 years, you know, before there were the major breaches, it was really compliance, PCI, Sarbanes-Oxley, HIPAA, NERC, et cetera. And that was really targeted towards those large organizations to be able to show who had access to privileged accounts, who used them, and organizations looking at automation to be able to help them do that. Whereas smaller organizations, you know, manual controls were pretty much the common. But then the breaches started happening. And when the breaches started happening, more organizations started looking to CyberArk, not just to be, and obviously Set Solutions as well, not just to help them meet audit, but to actually be able to start to reduce this risk. The board and executives started asking, what is our risk? Where a few years before, privilege was something that never came up. Much like as Michael and Nolan were speaking about, a few years ago, cyber insurance, getting into what it meant to be a secure organization was not something that the underwriters were getting into. But obviously, as the attacks grew, as ransomware as a service, as the attackers were being successful and they were able to scale from those large organizations and then starting to target those smaller organizations that before had kind of been free and clear. So now it was more of an equal opportunity. Any size organization, any vertical became a target. And obviously less than 30% of organizations were looking to get cyber insurance a few years ago. That ratcheted up very quickly with ransomware to over 75%. So the first time I heard about cyber insurance was a panic call close to 2 years ago. And at first it was, what is this new audit control? But as we dug in, we realized this was really what cyber insurance was asking of organizations was really no different than what we were recommending when an organization was coming to us post-breach, right? We need to recover. We don't have unlimited resources. We need to start to provide that foundational security, and we need to be able to measure that security. We still have audit. And because this is more of a strategic enterprise access rather than just a tactical check mark for audit, it needed to be very operationally efficient, right? So again, the benefit that we have is that the recommendations that we've been providing, the solutions that Set Solutions have been helping to deliver to these organizations are right in line with what cyber insurance was looking to be able to achieve. The one big change was we were no longer just looking at that small subset of IT. The personas they were going after started to grow, targeting developers, targeting an HR person who may have access to the SaaS application, and those phishing attacks being able to grow. Now, much like post-breach, when an organization is now looking to be able to meet the requirements of cyber insurance, just like an organization looking to recover from an incident, it's not as though people fall from the sky to help us clean it up. And there are privileged accounts everywhere. Every printer, for example, has an administrative account. So no one has unlimited time and resources to boil the ocean and go after everything. And boiling the ocean is never a good approach anyway. So what we want to do is to say, okay, if we have a limited amount of time and resources, we want to be able to ensure that every hour that we're putting into increasing security is the most effective hour that our most valuable resource our people can do. So when we looked at this, we have our blueprint program, which is something that we grew up organically over time. As we started to go on site from incident response, we started seeing those repetitive themes. Oftentimes we are that second call after that incident response, and being able to put in a prescriptive approach for organizations to meet. We call it our blueprint, and it's very much in line with what cyber insurance is requesting. Now, from a cyber insurance perspective, they're not looking for you to say, hey, what's the minimum that we need to do to get a policy, right? That is seen as a risky organization, somebody who's looking for a check mark. Cyber insurance implemented these controls because they can't afford the losses associated with somebody just taking the bare minimum. So going in and being very consultative with that underwriter. This is what we're looking to do, and this is why. So for example, we'll get into them in just a moment, but looking at domain admins. So yes, anybody with a domain account poses some risk, but somebody who is a domain admin, or whether that be human or non-human, thinking about a vulnerability scanner or a CMDB, if there's one account that's going to cause the bad guy the most benefit, it's going to be one of those. So if we don't have the resources to go after everything holistically, let's start out by identifying those high risk, low effort wins. Let's be able to get those wins in place. Let's be able to demonstrate to the cyber insurer as well as our operations team, and then let's start to build off of those pieces. And as Nolan said, they're not going to write you a policy if you're not willing to be able to step up. But if you are willing to step up, even if you're not perfect, if you're showing the effort, you're showing the plan, you're showing the foresight, then they are going to work with you because, again, I agree with Nolan from what I've seen as well. At the end of the day, they do want to write the policy, provided it's not too great of a risk for them. So if we just, apply those cyber insurance, requirements to a traditional breach, they map on. So if we look at our endpoint, we want people to use MFA when they're accessing their workstations. This is nothing new. MFA is a great control. They want us to have EDR. So we want to make sure that we have detection and response. So if something does happen, we do have that early detection, not waiting. But as those controls start to mature, that's not the end. It's not just detection. It's not just an incident response plan. It's not just having endpoint detection and response, but they're also looking at the proactive side as well. So those phishing attacks, they're prevalent. And when a phishing attack is successful and somebody clicks, it's much more beneficial to the bad guy if that user has full admin rights on their workstation, because that allows them to dump the LSATs, start to harvest those credentials, to start that lateral and vertical movement that they're using. So Microsoft and Gartner have been recommending this for years, but organizations tended to not do it across the board. There were exceptions with respect to developers and senior sysadmins, because these folks, they needed to run. They couldn't be constrained. So now organizations need to have that holistic. How are we going to be able to look at the endpoint holistically, both from a proactive as well as a reactive standpoint, and not have that implicate our operational efficiency and the ability to get jobs done? Second, as organizations started to put that focus on MFA and cyber insurers started to focus on MFA, a carve-out was found, a very common carve-out for those shared privilege accounts that exist by default, local admin, root, SA. And these posed a significant challenge for MFA, because when I'm using root, my MFA solution doesn't know who to send the challenge to. Anybody on our Unix team could use root. So oftentimes these accounts were seen as exceptions with respect to MFA. The cyber insurers realized that these accounts were being used most commonly in virtually every breach. So now the cyber insurer increased that focus to say, let's not just look at MFA, but let's also look at MFA for PAM to make sure that we can provide that audit and that two-factor for our individuals as well as our shared accounts as well. And let's not just think about our employees, let's also look about the vendors. You know, vendors have been the root cause of a lot of these breaches. We can't control the vendor's workstation. Oftentimes we provision and deprovision a vendor the same way we do a traditional employee, having to go through our HR onboarding process, getting an AD account, and then oftentimes that long lag between when they leave and when it's put in. So how can we make that more efficient as well? And then again, finally, yes, they want all of our privileged accounts to be managed under 2FA, but if we're going to start somewhere, let's start off with a high risk. Let's present this back to them. Okay, we're going to get 2FA everywhere, but we're going to start by focusing on our local admins, our roots, our SA accounts as our first starting point. We're also going to look at our domain accounts. And again, all domain accounts create risk, but if we want to target those ones that create the most risk, let's target our domain admins. Because in an on-prem environment, that's how the bad guy is able to traverse from tier 1, our servers, to tier 0. And those domain admin hashes could come from a person, they could come from a service account, they could come from a non-human automated process, even a third party like a vulnerability scanner that's using a credential to log in and run a scan. Because whenever I log into a device and I log out, I leave a hash behind and the bad guy is able to leverage that hash. So again, when we're looking at the cyber insurer today, let's say we're going to put in a process, but we're going to start off going after our domain admins. The number of people that have domain admin access are generally the fewest number, creating us the most risk. And once we're able to put that control for them, it becomes that much easier to move out to the server admins and the other users as well. Right? So we want to be able to make sure that we're spending some time with these folks saying, this is why we're looking to make the change, and this is what it's going to look like. And making sure that every step of the way we're getting those operations folks involved, and we're saying, operationally, is this reasonable? Is this going to create significant challenges? Because when we just come in and say, hey, we're going to do it and everyone's going to live with it, people then, that's when they're going to try to find ways around it. So in summary, when we're starting off by focusing off, let's focus on getting our MFA solution out. And by the way, if your MFA solution is a legacy solution that's not able to go across the board and not be able to scale with the modern architecture, now is a good time to be able to look and say, is it time for us to make a change, right? We will integrate with whatever MFA solution you're using, but we do include it because there are situations where we do have a legacy MFA solution that's not able to scale. We do want to be able to make sure we can tie that MFA both to individuals as well as privilege accounts and vendors. Outside of privilege, we want to look at our backups. We want to make sure that our backups are secure and available. And we want to make sure if there's any privilege account, any backdoor that backup solution uses, we're treating that the same way we do as any other privilege account. And we want to have an incident response plan in play. Obviously, Set Solutions working a lot with organizations on this as well. Let's have our incident response plan in place, because when that incident occurs, you're no longer in the planning phase, you're in the reacting phase. And you can't react when you're under duress. So making sure that we're putting those pieces in place. And when we show that to the cyber insurer, they're going to work with us. They're going to make sure we get there. And then also starting to think about the future, right? Today, we're focusing on domain admins, but in the future, we now are moving to the cloud. We have our cloud consoles. We have our SaaS solutions that now a business user is becoming a privileged user. So how can we be able to phase those out? And looking at your other security vendors and making sure that it's a platform, making sure that you're not creating integrations between security solutions, but these integrations are supported at the vendor level, so that as upgrades occur, those integrations are going to be able to flow and not fall on your team to be able to tie those apart. So from a CyberArk and Set Solutions, that's really been a key focus. Let's make sure we're not a silo. Make sure that when we're adding this new control, let's make sure it's going to coexist with our ServiceNow ticketing system and CMD. Let's make sure it's going to coexist with our SailPoint. Let's make sure it's going to integrate with our CI/CD tools and our new modern implementation that we're putting in place, so that these cyber insurance are seen as a motivation, a way to get the budget to do the right thing for security, but not in a way that's going to create something that's overarching, manual, and not scalable.
It's a fantastic rundown, David. I really appreciate that. And it's honestly a great segue into the next thing that I want to talk about with Nolan. So Nolan, you and I, again, have had this conversation. So has David. It's the insurance goal is the cybersecurity insurance agent's goal is actually not to check whether you have the stuff in place. They're not going to go do that. They're going to rely on you to provide details like what David just gave. These are the things we're doing. These are the tasks we're taking to make sure we've got a secure program. Walk us through how that affects the policy, and then what happens, God forbid there is a breach, what happens after that?
Right, absolutely. And it's critical to be honest up front when we're going through the underwriting process. You might not be perfect, right? I mean, if a guy who manufactures valves might not understand, exactly what it is that their risk is and what that they need in place. So a lot of insurance companies have gone what they like to call best practices. And a lot of what they found out best practices is for a client is stuff like David and Michael that you've touched on, that Set Solutions and CyberArk has consulted with them so they can understand what best practices is. So up front, you might not have all the right answers, but take that opportunity. One, you got to be honest, because here, if you're not honest, like we kind of touched on earlier, you're going to get a policy in place. You're going to have a loss for something that you said you were doing to protect it. They're going to find out you didn't, and then they're going to have means to deny the claim. And so now you're paying for a policy that's not going to protect you. And those costs can be extremely, extremely large, as we all know, between ransomware, between the social engineering losses that you see. The averages of the losses are just going up substantially. So be honest up front, but then say, okay, you said I'm not answering this one correctly, so how do we get this done? And a lot of companies aren't going to probably have that internal resources available. So it's important to have a Set Solutions or CyberArk to get you there, because not all people are going to be masters in this realm, right? And so let's outsource that on to some companies, some established companies that have actually consulted insurance companies to find out what is best and what's most ideal. So obtaining the coverage, be honest up front, but also be open to suggestions and be open and willing to invest some money into those suggestions in order to get yourself to be more of an ideal account. When you do that, you create competition amongst the insurance companies. They like good accounts. Well, more than one company is going to like a good account. So if you're ideal to 5 different insurance companies, as an independent, we can go to all 5 of them, all 10 of them, whoever it is, and let them all compete for your business, which is going to lower your costs and going to give you more favorable terms on your coverages. And so that's really the name of the game. But, again, be honest and don't be afraid to ask for suggestions. And a lot of what can be taken care of will be through a third party like a CyberArk or a Set Solutions. So, there you go. Don't deny all your payout. So be honest up front with what y'all are doing and say, what can we do to make it better? That ultimately is going to get you better terms and more competitive pricing, and then going to get a claim covered. So, there's a lot that goes into it. Some of the stuff that they ask up front, David had hit on, what's your incident response plan? When you're in this proactive mode or reactive mode, what do y'all have in place if something does happen? You do have a breach, your client contacts you and said that they've been breached. What are we going to do then? Well, I'm not sure. Okay, well, let's start to consult on an incident plan. Let's get that in place. And kind of like David mentioned, if the underwriter is seeing that you're willing to do that, it's going to relax their shoulders a little bit and then be more favorable. Hey, you might not be there today, but we have a plan in place to get X, Y, and Z in place. And it's interesting too, some of the stuff underwriters ask is, how much are you investing in your IT protection programs? I mean, they'll ask you legitimately, how much money are you investing in malware? How much are you investing in a response plan? How much are you contacted and contracted with a CyberArk or with a Set Solutions? Or are you just doing everything on your own? And what's your experience with that? And so they'll actually ask how much you're investing, and how much you're investing or willing to invest is going to show how much they're going to be willing to write you as a client. So it's really all kind of works together. That's what's so good about this here right now that we're doing is what a Set Solutions and CyberArk does. They've recognized the issue, the increase in cost in the cyber insurance, and they're stepping in and saying, look, we're the ones who are helping the insurance company understand what you need to be protected. So let's get something in place so that, yes, you might be investing a little bit more in your cybersecurity. One, you're going to protect yourself from substantial costs, and two, you're going to lower your costs in your insurance.
Yep. Perfect. Thank you for that. So I think that I'll say the word segue twice. I usually don't say it that many times. But I think that definitely segues into a case study, David, that CyberArk has got. And can you talk us through this, kind of what they had before, and then how you helped with the cyber insurance required for them?
Sure, happy to. And I actually picked we have a long list of organizations that we've helped out with this. We even have a dedicated, engineers helping through this, because what we found is it's not just technology. What we're looking to do is not technically difficult, but it is change. And if I've had my own domain admin account as part of my ADM account for 5 years, I'm going to be very concerned about making any kind of a change. So we see to be successful is, let's not rip the Band-Aid off. Let's not pull the rug out. Let's be able to take, again, if we have the luxury of time to be able to put together a plan, let's use it. So for example, if we have all of our passwords in a spreadsheet today and we're going to move them to a PAM solution, let's have those two coexist for a week to make sure that people are comfortable with the PAM solution before getting rid of the spreadsheet, right? So that walking you through, and again, working together, obviously from a Set Solutions, looking at more of a holistically as well, is very beneficial. So having that knowledge of someone to be able to hold your hand, and our engineers and Set Solutions have worked very closely on this to make sure that we are marching the same drum. So when we are looking at this, I actually picked an insurance company. Because this is not just limited to every other industry. Every industry, every size is targeted by this. And this insurance company, mid-sized insurance company, did have an MFA solution in place, and they were making their best efforts to be able to scale it out. But what they found, it was more of a legacy, older MFA solution, and they were actually having challenges in investing a lot of their resources into it. Their PAM process was manual. Now, before COVID, this was a top priority from the CISO, but they were a very much an in-person organization, and moving to having people work from home was a completely new world for them. And there was such a fear that moving to an automated PAM solution would slow the business, that was actually punted. So it was a high level, but due to COVID, that was really pushed back. And then finally, their vendors, the same challenge that I mentioned before, they were treated like employees. And if I was coming on for a 2-week engagement, I was treated the same way as an employee would hopefully be there for years. So coming out of COVID, these were already the top priorities, but cyber insurance caused them to accelerate. And accelerating is never an ideal thing, but the nice thing is that they already had a plan in place. And as they started to look at it, they actually decided that they were not going to keep investing money into the legacy MFA solution, that this was the right time for them to make the change to a more modern MFA solution. And when they looked at it from their privilege accounts, they said, okay, we can't do everything, but we can target those domain admins first. We can leverage our PAM solution to secure those domain admins, and we can then prove that we're going to be able to use MFA for our local admin account. So that was their phase one, was just domain admins, local admins, and putting a pilot in place for their vendors, right? So they were picking one vendor and they were putting a pilot to show that they were going to then take what they're doing with the employees and scale that to the vendors. And what was really, they really got some extra points from the underwriter is they proactively went and they said, hey, we're not just going to look at people, but in this case, they had a vulnerability scanner that was using a domain admin account to run the scan. And they said they're actually going to proactively tie that in. It was very easy for them to do. It was an out-of-the-box integration, but that was an example of going to the cyber insurance saying, not what the minimum we can do, this is what we can feasibly do, and this is the timeline that we're going to be able to get through. When they went to their operations team, there was a lot of concern. And this is one of the main reasons they didn't do it before COVID. They said, well, I can't go to a web interface every time I need a domain admin account. This is really going to slow me down. It's fine for once in a blue moon, but changing my workflow is a problem. So together, we spent some time. We had a Windows session, a Unix session, as well as a database session, just 30 minutes just with a DBA to say, okay, this is what it would look like. What are your concerns? And making sure we had their buy-in, because the last thing they needed was a surprise given their accelerated timeline. So investing a little bit more time up front and making sure they really understood their outcomes and making sure they really understood the operational impact of those outcomes really saved them some time in the deployment, because they weren't starting from scratch. They weren't dealing with people saying, what is this? I didn't know this was coming. I can't do it. Everybody was on board going forward and they understood the why. So really that was it. So it was, technology, a best-in-class solution is obviously important, but it's people, process, and technology. It's being able to have that blueprint, that prescriptive approach to follow, and making sure that we're able to measure the progress and we're not being held up by the fact that we're making life miserable and we're slowing down the business. So again, they were able to come out of that and meet those requirements, and now they're focusing on service accounts as well as extending their vendor accounts out and starting to look at their cloud consoles as well. So they were able to make sure they got through that, and then they're showing the insurer that they're not just giving up, but they're starting to take now some more incremental and some more reasonable steps at a timeline of their choosing rather than a timeline that was forced upon them.
I think that's a perfect example of a consultative approach and being able to help somebody grow. And it speaks to that earlier slide where you're doing that incrementally and you don't have to eat the whole elephant right in the beginning. So it's a great example.
And I think just to add to that, such an important thing is the training of the employees, right?
Mm-hmm.
I mean, of course, there's the technology aspect, there's the protective IT software, but the training of the employees, because often it's human error that allows the backdoor to come in. And so the more you can do, I mean, at our agency, we have, it's unbeknownst to us, but we have a kind of like a dummy email, phishing email or something to go out, and we're able to track, and we do this through our insurer, to track on who's maybe clicking on what they're not supposed to or who's not reporting it to IT. And so the employee training is so critical, especially with the increase in remote working. That's probably not going away. I mean, and we're opening back up and things of that nature, but just the structure of companies right now, there's a lot of remote working going on. And as a statistic, 40% increase in claims since remote working started in 2020. So, that's probably not going anyway. But again, the consultative approach of you do all the things with CyberArk, Set Solutions. Let's also train the employees. Let's do some test runs and see how well you guys are performing and your gals are performing and how trained they are. And if not, let's get it together, because typically it's human error that causes it to the breach to happen. So I just wanted to point on that. It's a great job, David.
Great points. So I think we've run through most of this. I'm going to look and see if we've got any questions here. Reading this first one, trying to make, okay, I think I get what they're asking. So it looks like, so I think the essential question is they're going to get insurance. They have insurance right now, but we talked about third parties earlier. If I'm reading this right, we're talking about third parties earlier. If they've got insurance, a lot of companies that are third parties would have their own insurance as well. Do you see that typically being able to help as kind of side coverage, or is that typically, and Nolan, this might be for you based on what you've seen people get. Do you see third parties, like if somebody's providing you some type of, business solution for you, some type of software or something, that they have insurance as well that helps cover any kind of claims from somebody who's using theirs? Does that make sense?
No, it does. And it definitely helps. Because if you're doing it internally and you're not using a third party at all, you're going to be the one who made the mistake, and your insurance is going to be the one that pays. Whereas if it was a third party and the reason for the incident, the cause of the loss was actually due to faulty software that glitched, was done by consulting. We took the advice of the third party. We went ahead with the plan that they had showed us, and that plan wasn't sufficient. And so that was the cause of the loss. So it goes back to the cause of the loss. So if you have a third party, you do kind of push that risk off to them, being that, or if the case is that the cause of the loss was caused by the third party's product or service. So it does kind of alleviate them a little bit, because you are pushing some of the liability onto the third party. Whereas if we're doing everything internally, if there's a claim, it's us and carrier A is paying for it, instead of, whoa, the cause of this loss is actually from the third party. So we can go ahead and have them pay the claim, or we'll pay the claim and subrogate that claim from them, and it won't count against you. So anytime you can move liability around, it definitely helps. And the more established the company that you're dealing with as a third party, I can speak for Set Solutions, the more insurance they carry. And so that does put them at ease. And again, it goes back to the cause of loss, but absolutely, that is moving the liability around, which insurance companies like.
Okay.
And just to add to that, no, I think it was you actually said so. Slightly different tack is that you were talking about how there's an increasing challenge. For example, Michael, I think use the car accident example. So if somebody hits me, well, my insurance will just go after their insurance company. But in the cybersecurity world, it's much more difficult to go after those bad actors. So I would make sure that your underwriter is okay with this. And that they do feel that they could go after that organization, because it may seem good, but the moment you're breached, much like when other times we've outsourced, well, we outsource, so it's the outsourcer's responsibility. At the end of the day, we're still stuck hanging the bag. So I completely agree with Nolan said, but that would probably be one, Nolan, if you agree, to make sure that that's above board with the underwriter and that they agree with that perception. Would you agree with that statement?
Absolutely, absolutely. The more transparency, the better. So yes, of course, so they understand. So absolutely, I'd agree 100%.
Yeah, I think the example you're talking about, David, we actually talked about on the podcast, whereas I had gotten a wreck and totaled, and my insurance was able to go after the other person's insurance. But yeah, in this case, if you don't have a third party involved, this the attacker lives in some foreign country and it's really hard to get them. The insurance is not going to be able to cover that cost, so it does hike up costs quite a bit. One other question we had is, and this is probably for both of you, I know this is almost like a question around reference architectures, like what are best practices or templates that a insurance company would ask to what you have in place. Are those things that you generally share with your, I'm assuming you're going to have that questionnaire anyway, so you're going to give that to your customer, but is that stuff you share outside? They're kind of asking for if it's potential to get a template from that, or maybe CyberArk from your blueprint. That is something that we could share out.
Yeah, definitely. I could send, I definitely could share what they're asking. So I could get you a questionnaire on the cyber insurance and you could see exactly it is what they're asking. And you could tell what they want you to say yes to and what you want to say no to. And a lot of it is what they want you to say yes to. But, MFA, another thing that's kind of interesting that some underwriters will do is they'll check the dark web. They'll actually run a test through the dark web for your company, for your email, and it'll show how many times it gets hit. But substantial documentation, they want to know how many different records that you hold, size of your company really doesn't matter as far as your exposure to getting an attack. I think David had touched on that earlier. It's small businesses are getting targeted just as much as the big ones. You just hear about the big ones in the news because they're a little bit more recognizable name. But to have your own workplace cyber policies and incidents response plan, what kind of employee training do you do? What type of security IT do you have currently? Do you do audits? Do you have consulting work done? So that's just kind of a brief overview of what they're asking, but I could absolutely share a template, directly from a carrier. I'll take them off of it just for that reason, but you can get you the Q&A, absolutely. And David, you might have something to add to that.
Yes. So the 5 categories, and again, I can also send, something. Mine isn't going to be as in depth as what Nolan has, but it's multi-factor. We're looking at our employees, our privileged accounts, and our remote users. Patch management, endpoint security, data backups, and employee training. So I think that kind of mirrors basically what Nolan said as well. So that is another benefit that you do have is it's not as though you're going to see drastically different requirements from one to the next. They are all looking for pretty much the same foundational security. So those questionnaires will probably resonate across the board.
Yeah, I agree with that. Yeah, and that's something we get that, Nolan. We can try to, when we share this out, we could try to send that as well in a link. We can share that somewhere. So Well, gentlemen, that's all the questions. Unless you got any other additional points, I think we're done. Y'all good?
I'm good.
Sounds like you're good.
We appreciate it.
Absolutely. Thank you so much for joining, everybody. Again, thank you for joining this cyber insurance talk. I know it's not the most fun topic in the world, but it is definitely something that is huge today. So just really appreciate you being on. Again, answer that survey when you get that in email, and you will be entered into a drawing for a $100 gift card. So somebody will win that. And we'll be sharing this out as well. So again, thank you everybody for joining. David, Nolan, thank you for joining. Look forward to the next time.
Thanks for having us. It's been great.
All right. Bye-bye, everybody.